Okay, without any further ado, we get the opportunity to talk to one of our traders. You know him as Swing Trader. He's been with us for a little bit now and giving out some good ideas and some levels, lots of support and resistance. Many times we'll take a look at what he's looking at and lines up with some of the things that we talk about on the charts. So why don't we take the opportunity to give a big round of applause to our man, Chris, Swing Trader. How are you today, Chris? Looks like he's having a little technical difficulty.
Okay, should be working right now.
All right, sounds
You
good.
guys hear me okay?
I hear you loud and clear. I
All
think
right, thank
everyone.
you for your patience. I was trying to set up the mic and then I tried to set it up here on this end and I had to just allow it on Google. So just got that done. Glad to be here.
All right. Well, we're glad to have you, and I will give you an opportunity to introduce yourself. I don't want to butcher your last name, so therefore I'll let you take it away.
Yeah, for sure. So my name is Chris, last name Duhanci. And I gave a little bit of a brief introduction the other day with Gavin, but I'm a chartered market technician. I've been involved in the market since about 2008. It was around that time, it was pretty passive. I started trading actively around 2012, 2013, and I've been doing it since. Like I spoke about it the other day, and I'll dive deeper into it today. My approach, it's evolved over the years. As you all know, markets are a big learning curve, and you're always getting better, always evolving, always seeing different things. I'm focused on executing the same top-down framework on every asset class that I trade. I focus primarily on equities, but I'm also trading some futures, some of the metals, some of the energy names, some bonds. And pretty much what I do is I start top down, which I'll be getting into from, I look at all asset classes, bonds, I look at equities, I look at commodities, currencies. I see the charts individually of each, and I also look at how they're performing relative to one another. And then I pretty much drill down from there. Let's say for equities, is it an uptrend? Are the indices in an uptrend? Are they in a downtrend? And then from there, I filter down into if we're in an uptrend, I'm looking at generally the top three strongest sectors or bottom three weakest sectors in equity index downtrends. So that's what I'm focused on. My average hold time is, as you guys see it, it's anywhere between 1 to 5 days, and I'm primarily trading with the trend, and my counter trend trades are limited, and that's about it. I traded for a prop firm back around, I believe it was around 2019, 2020, right around that time frame. I was there for about a year, and but besides that, I've just been just actively involved in the markets. I'm very big on researching. I'm very big on just reading about past technicians, whether it's Wyckoff, whether it's Gann, WD Gann, whether it's Taylor. There's a lot of gems, especially in the older works from the 1900s, 1950s. My belief is nothing in technical analysis is new. Everything, we're all standing on the shoulders of giants, and everything now is pretty much based off of what's been written about in the past. So that's a brief introduction, and I'm sure we'll get deeper into my process and my background as well.
Yeah, for sure. In terms of if you could quantify what your edge would be in trading, how would you frame that? What would you say it is?
If I could quantify my edge, so first of all, I'm looking for my approach. Everything that I say, generally, it's a guideline. I'm not systematic where I'm doing the same thing over and over again. Everything is a guideline. But the picture that I'm looking for, the setups that I'm looking for is always the same. I'm looking to go in direction of the weekly and the daily trends, and I define those off of price structure first. That could be key swing highs and swing lows, followed by the EMAs, the moving averages, the exponential moving averages. I use the 20 primarily, and then I'll wrap a 12 and a 26 around it to just as a backdrop for trend. And generally, whenever I see those moving averages sloping lower, we're generally in a downtrend. Whenever, and obviously price being below it, and whenever those moving averages are sloping higher, we're in an uptrend. So that's how I define trends based off of those weekly, daily time frames. Price structure first, followed by the EMAs, and then I'm looking to join in direction of that trend at support at support or resistance areas. So if we're in a downtrend, I'm looking to I'm looking to join that trend lower at resistance areas, and if we're in an uptrend, I'm trying to join that trend higher at support areas. And I kind of got into this the other day briefly. So this picture is the same. I'm looking for the same picture over and over again. And what I do as price approaches these, so whether let's say we're in a downtrend, price is approaching resistance. I'm not trying to pick that top, even though we're in that downtrend. I'm not trying to pick that top at resistance. I'm waiting for price to stop, stall, and show some kind of a reversal pattern forming. And I can get into, I can kind of draw out and kind of show you guys what I'm looking for. But I want to see price stopping at these levels and then showing some signs of it reversing in order for me to be confident. Not, it's all a probability, but it increases the probability when I see price stalling and then reversing back in direction of the trend at that respective support or resistance area.
Okay. And a couple of things. First, if there is a chart that you want me to put up so that the listeners can see exactly what you might be referring to, just let me know what the ticker is.
Yeah, you
And
know
we,
what? I could share my charts too, Jim, if that's
oh,
okay.
okay. Yeah, if you
Yeah, I
can,
got
for
everything
sure.
set up so I could do that.
Perfect. And while you're doing that, my question is, you mentioned that you're looking for some type of confirmation in, let's say you're looking at something, it's a downtrend and it's going into resistance, and you don't blindly put on a trade into resistance, if I'm understanding correctly. You're looking for some type of confirmation that that resistance is holding, correct? What is that confirmation?
So it's a picture. Let me show you. Are you guys seeing my charts?
I don't see them.
I think Sammy's saying yes. No. Let me see. You know what? It might not be showing. Let me try something else. What about that? Any better?
Yeah, I can see it on my end. If anyone needs to know how to get to see his charts instead of mine, if you'll see Jim Z audio, that's mine. You'll see G McGuire Event Trader, that's his chart, and then 118 West Holdings Swing Trader, that would be his. So if you click that, here, let me show you on, just in case you're looking at mine. If you click these little tabs right here, you'll see mine. If you click swing traders right here, you'll see his, but there it is.
And it should be on the QQQ chart.
All right. So if everyone's good to go with that, we will roll with that. I'm going to put QQQ on my chart just in case. All right, there we go. Okay, so back to the question was we have you're looking for a market moving within a trend, and you defined how you define a trend,
Right.
and you look for support resistance levels. If you're looking to fade the market, you don't blindly go into just at the resistance levels. You're looking at some type of confirmation, and so I was asking, what is the confirmation, or is it a
Yeah.
series of
So the
confirmations?
confirmation, let me draw it out actually. I was thinking about how to do today, and I thought that if I have this paint tool up, I can kind of draw out what I'm talking about, and then we could look at it on the charts too.
Great.
So at an area of resistance, let's just say, don't mind my drawing, but let's just say this is resistance, okay?
Mhm.
As price is approaching that zone, I want it to stall within that zone. And that stalling process could look different every time. You know, the markets are it's dynamic, it's always changing. Generally the pattern that I'm looking for, it could be it could be something like this. It could do something like that either on the 30-minute time frame, the 65-minute time frame, or the 5-minute time frame. It could also do something like this where it's going up and it does something like this too. It kind of takes off that swing. It kind of takes out that swing high right there and then takes out that swing low. That's another reversal pattern.
Mhm.
And whenever it breaks below, I'm always looking at swing lows and swing highs in price. So basically, when it breaks below that swing low, that's my trigger to get into the trade. That's my confirmation. Obviously, it's not always going to look picture perfect like this. It could be something like it goes up, just like vibrates a little bit like that, and then it goes down. I just want to see any picture of it stalling and then reversing lower. So now, if we look at the charts, like SPY was a good one. It's a good example. It's not always like picture perfect like this one, but this was a resistance area that I was paying attention to, and it's actually one that I mentioned the other day too. And if you look at price kind of coming up into that area, I mean, mind you, we had that gap down today, but we went up into it. Let me take that out. We went up into it. We kind of formed that little swing low. We went up to about there. And then we gap lower. So let's just say that gap didn't happen. My trigger to get into this would have been right there. Would have been right there below that swing low. That's my
Okay.
confirmation at that resistance range. And there's often times that you'll see that developing like intra-session during the session. But obviously there's times that price will stall at that resistance area and just gap lower like we did today.
Mhm.
But this area is in play right now for me because we gap lower and then tested right back into it. So, and I actually just wrote about this a little while ago. I said that SPY is test, or maybe I said it on the QQQ because the QQQ is the same picture, but it's testing into its newly formed resistance range and pretty much look for it to test. And if it holds below, my thesis is always price is going to travel from resistance to support, support to resistance. I think that price travels in waves, ping pongs up, ping pongs down. So if resistance holds, I'm always looking for price to test support. And at those support levels, I'm pretty much looking at the same thing, even though in this case, I probably won't want to trade this support range because we're in a downtrend per the way that I define it.
Mhm.
I'm still looking for that basing process and I'm looking to pretty much see if price is going to respect that area or not, or fall below it, break below it. And that's if I'm short and price falls, I'm looking at that process while I'm trailing the stop on it to see if that range is going to hold or not. Does that make sense?
Yeah, I think it does. Let's see if we can put this into a real-time perspective.
Yeah,
You were you highlighted the triple Qs a little bit ago,
yeah,
and in that one, it was testing newly formed resistance. So
yeah,
we've got the resistance area, and that's at um, 50, or excuse me, 583 and a quarter up to 587 and a half.
yeah.
So we got as high as 586 and we've come back in. Has that given you a signal to short it then?
It has because okay, so let me break this down. So this the highlighted blue box is that area that I just mentioned a little while ago, that newly formed resistance range.
Hmm.
This was a reaction to this resistance range right here from 591.35, 587.25. My think and I whenever I mentioned it, I think I said that there's another layer of resistance right up top as well.
Hmm.
So same picture as the SPY. It did this, went up, kind of came down, put in that swing low, put in that little swing high, and then a gap lower. Now we're testing it. So ideally, I'd like to see this break intra-session where we don't get this test back up, because the test back up kind of, I'm not going to say it reduces the probabilities, but it kind of puts it into question for me. I'd like to see it happen intraday, but since we're testing this newly formed range and it has this reversal pattern, I still consider it as a short signal. And what I could do, again, what you could do is you could to wrap that range. That's a little. This is gonna be too many lines. Let me take that out. What I could do over here and what I like to do in these types of situations when it gets a little tricky is I'll come and I'm watching price action over here too. So we could even drop down to a 5 minute chart and kind of look for that same, and the 5 minute chart's right over here on the bottom. We could kind of look for that same type of pattern. See, over here, we're getting that on the 5 minute chart. We got that move up off of the gap down. Now we're getting this little basing pattern right here. So for me, again, all this is probability based, but for me, probably if we break below that wick, that 581.75, that shows me that okay, we're gonna continue back down in the direction of the trend. You could even wrap that a little bit tighter, cut off those wicks, 582.50, but the greater confirmation would come 581.75-ish, right around that range. But if I see price breaking down below there, I'm like, okay, that's a sign that this level may be holding. But you asked me how I quantify my edge. One thing that I forgot to mention is these are the setups that I look at, but my biggest edge comes from risk management, because you could be the greatest technician, you could be you could identify the best setups, but if you don't have a way of managing risk, I mean, you're gonna lose. You're gonna pretty much, you're gonna lose all your money. Your account's gonna get blown out, because the way that I see trading is the you're gonna be right about 50 to 60% of the time. And it's what you do with those losers and it's what you do with those winners that counts. So, yes, I'm looking for price to, in this situation, I'm looking for price to break down below 581.75 as a trigger to enter short. But if that goes down and then it kind of comes right back up and stop, and I'm going to place my stop. Typically, I like to place my stop beyond a resistance range if I'm getting short, but at times when that range is a little too wide, I'll place it above the high of where price reversed. So if it goes above that stop point, I'm quickly getting out. And if it reverses back down in the direction of the trend where I'm anticipating, I might get back in. But it's all about minimizing your losers and trying to maximize your gains, because Market returns, there's a bell curve, there's a Gaussian curve, and I actually have a picture of that too. Sorry if I'm getting long-winded over here.
No, it's okay.
The way that I look at it, the market is not a Gaussian bell curve. It has tails on both sides, right? So if I could draw on here to kind of, let me see. So the left side for me, it represents the losses, and the right side represents the gains. Market returns are not evenly distributed. It has heavy tails, it has fat tails. So for me, my job is to come in and reduce that risk, reduce the downside, and cut it off here, but try to maximize this portion of it and try to ride out those winners. Because as long as I'm right 50 to 60% of the time, I lose small, but my gains are typically a multiple of 2 or 3 times my average loser, and then some. You're going to catch the outlier trades at times as well, where that multiple is going to be wider. It's the law of large numbers are going to work out in my favor. So that's another big part of my edge as well. It's not just the support resistance areas.
All right. So when you break down your overall strategy, it's about 80% technical analysis. Now, you've kind of broken down what you view as trend. What other indicators are you looking at other than the EMAs? And is there anything else that is on your chart that gives you some idea of I guess baked into the formula of your technical analysis?
Yeah, so I pretty much divide technical analysis into a few different sections. Section one is trend. Trend I divide into what's the trend direction, what's the phase of the trend, right? We could be, let's see how I could describe that. We could be on the daily chart over here on the Qs. See, we could be trending lower from this point, but that trend eventually gets oversold or it gets overbought. Actually, before I go there, I do want to mention this before I go there. So I put that into trend. I put it into direction. So this direction is down. I divide that into phase. This phase over here is an impulsive phase for me. And then that move that we get against the trend is a corrective phase for me. So a trend is either moving in an impulsive phase in direction of the trend, in direction of the overall trend, or it's correcting against the prevailing trend. That's what I look at. The other category is, where is that trend going to terminate? For me, that trend will terminate at the opposing swing high, and it'll continue at the opposing swing low. And then back to that first point that I was mentioning, these trends also get overbought and they get oversold. So in this example over here, the way that I quantify overbought, oversold is I just put on Bollinger Bands. That's what this section is for me. And whenever I see price piercing outside of that band, it's a black and white way for me to quantify whether that trend is overbought or it's oversold. So that's a trend portion. So TA for me is trend. It's support resistance levels that I try to engage in direction of the trend. And then I'm also looking at momentum. And with momentum, I'm looking at RSI. So in this situation, while I'm watching this price pattern over here, I'm also paying attention to what momentum is doing, what the RSI is doing. Because oftentimes you'll see things in the pattern of, they say momentum, one of the principles of the market is that momentum precedes price. And at times you'll see price patterns in momentum that you're not going to see in the raw price data alone. So if you look at it over here, momentum RSI is making it's making lower highs and lower lows. So this is kind of telling you that, again, it's increasing the probabilities of this area holding and price turning lower. It's never a guarantee, it's always a probability, but it's increasing those probabilities. In this case, if the RSI was, for example, making a making a high and then another lower and then another higher low, then in that case it's kind of it's painting a different picture. So that's what I look at when it comes to momentum. So those are the main things that I'm paying attention to from a technical perspective.
Okay. And
Yeah.
in terms of your RSI setting, what's your I guess choice? I like to use a 2-period RSI. I use it a bit as an oscillator, and that's mostly
Yeah.
because I could never really figure out how to use the standardized ones, so they didn't make sense to me. But that's why we have people with different perspectives come on and talk about the things that they see. So what setting do you use for your
Yeah,
RSI?
two-period RSI is a great one, especially on the daily chart to show you when it's overbought, when it's oversold for like those intraday 2 to 3 day up, 2 to 3 day down type moves.
Hmm.
I just use the normal setting. I used to use 10, but I'm currently using 14.
Okay.
My oversold is 40, my overbought is 60. And generally, what you could do is typically, this is something that I look at, when the trend is down, the RSI should be below 50. And when the trend is up, it should be above 50. So that's another thing that I kind of keep an eye on as well. But my main trend measures are swing highs, swing lows with the EMA backdrop. But that's something that you could look at as well, whether the RSI is above 50 or below 50.
All right, so I think that clears up your technical foundation, which is about 80% of what you do to come up with ideas. You have about another 20%, which you use fundamentals. So, what specifically are you looking for in whether it's news or whatever fundamentals you might be looking at that may change your trade or what you look for to execute a trade?
So the fundamentals, 20% is a little lenient actually. It is 20%. Um, I'm pretty much paying attention to. There's a website that I use. It's called Scotia Bank FX, and they write a pretty good report early morning. I think it comes out around it's 6 a.m. Pacific, so probably like around 9 a.m. Eastern, more or
And
less around.
briefing.com.
Right, right, right. No, definitely briefing.com has great content as well. So pretty much what I'm doing is I'm looking at that. I look at briefing. There's a couple accounts that I follow on Twitter that'll pretty much, and they have like the headlines coming in throughout the day. Obviously, the major theme right now is the Iran situation. So with those headlines coming in, I'm just kind of formulating some type of an overarching thesis in my mind, but at the same time, I'm not I'm remaining very flexible with that because there's been a lot of times, especially in the past, where I may have an opinion on something and I try to act on that opinion based off of a prior bias, but the technicals are not showing me that. So it just kind of goes against me. So I'm formulating a bias in my mind, but at the end of the day, it's the technicals that are the truth for me. It's the factual mathematical data. And I'm pretty much using the technicals to trade in direction of whatever the fundamental narrative is for me.
Okay, okay. There's a question from Sammy, one of our listeners, and I don't want to get too far away from our conversation about price and support and resistance and whatnot. But the question from Sammy is, if price violates support and resistance but comes back, trades above or below, is your signal still valid? So basically, how do you weigh, a solid signal versus a false signal? How does that all play out?
Okay, if price violates support resistance but comes back and trades above below it, like if it just like goes above it then comes back below it, Sammy, is that what you mean? If that's the case, yeah. If that's the case, yeah. So I write the technical take, and there's so many times where you'll see price kind of trade above it At times it'll close above it on an intraday basis and then fall back below it, or kind of wick above it, not close there and fall back below it. So in those cases, I still consider it valid, and I consider that kind of that high that it made above resistance, for example, as the area that it needs to break in order for that area to be violated. I guess what I'm looking for is a decisive break, and when I say decisive in this case, I mean if I get a daily close, a six, and not just by a nickel or 10 cents or 25 cents, the picture matters, but if I generally get a daily close above that resistance range, I'm probably going to consider it violated. But there's often times that you'll see price kind of on an intraday basis kind of get above it, because these are ranges. They're not, they're not set in stone. So you'll see price kind of wick above it, even close above it on a 30-minute basis, 60-minute basis, then fall back below it.
Okay, and looks like Sammy is pleased with that answer. I do want to get back to kind of how you bake in your fundamental and technical process, and we're going to start at the beginning of the day. Walk us through your workflow. What's the very first thing you check each day?
Okay, so my day actually, in a way, it starts the night before. So I'm always doing my homework the night before. So let me start from there, and then that kind of flows into what I do the next day. So after the close, pretty much a couple hours after the close, I take a break, I come back, and my process is fundamentals. Okay, now I'm looking at forexfactory.com. What's coming out the next day? Not only in the US, but I also want to see what's coming out in Europe, what's coming out in the UK, just what's coming out around the world. The primary things that I'm paying attention to is either federal FOMC like central bank announcements, whether it's central bank meetings or one of the guys are going to be speaking. I look at that because one of the things that I pay attention to, I think liquidity pretty much moves the market, and whenever the Fed or just a group of central banks from around the world are injecting the system with liquidity, that's pretty much injecting capital into the markets, and whenever they're removing that liquidity, it's taking money out of the markets. So that's one thing that I pay attention to. Central banks, I look at inflation reports, I look at the non-farm payrolls, and I look at wages. I'm looking for those. If you go on forexfactory.com, you'll see that there's some red news events. That's what I'm paying attention to, because those are the market moving events. From there, I go down into Scotia reports are not out at that time, so I'm kind of seeing the headlines and what's coming in. And then what I do from there is, and I do this on different computers, by the way. So this is the platform that I use. So there's two types of analysis that I do. There's relative strength analysis, and then there's individual chart analysis. And I do that on each of the asset classes. I start doing that the night before. TradingView is a platform that I use to do that relative strength analysis. And starting top down from an asset class level, I'm looking at what the different asset classes are doing relative to one another. So this AGG versus the SPY on a weekly time frame. I'm looking at all this on a weekly time frame. So I'm pretty much looking, what are bonds doing relative to the SPY? What are commodities? This TRJEFF, it's a commodity complex. What is that doing relative to the SPY? What's IWM doing relative to the SPY? What's EFA, which is international stocks? What are they doing relative to the SPY? I'm not putting much weight on this portion right here. It just gives me an idea, just gives me like an overarching idea of what's happening. And then continuing on with the relative strength work, I look at, so first of all, I'm looking at, like I mentioned before, everything's on a weekly basis. I'm looking at the SPY. Are we in an uptrend? Are we in a downtrend? So right now for me, SPY is in a downtrend. So from there, I'm looking at how each sector each GIC sector within the market is performing relative to the SPY. So I look at consumer discretionary XLY, I look at technology, I look at all of them pretty much, and what they're doing. These three workspaces up here are geared towards that. I'm looking at what they're doing relative to the SPY. And generally, in uptrends, I want to focus on the top three best performing sectors, but it's a general guideline. It's not always the case, but generally, in an asset class uptrend, in an equity index uptrend, I want to be focusing on the top three outperforming sectors, and on a equity index downtrend, I want to be focusing on the bottom three worst performing sectors. So in this case, for me, right now, it's XLY, consumer discretionary, it's technology, XLK. XLC is catching up, communications, and also it is XLF. Where's XLF? What happened over here? Oh, there you go. XLF is the third outperforming sector for me. And the way that I analyze relative strength is the same exact way I analyze individual charts. I'm looking at trend as defined by key swing highs and swing lows, EMAs as a backdrop. Then I look at support resistance, and I look at momentum on there as well, the RSI. And I have line charts for this, and you could still kind of see swing high. Line charts make it easier to identify swing highs and swing lows and support areas as well. I'm not using traditional candle charts for this type of work. So from there, what I do is, when it comes down to the individual stock level, let's just say I decided to go with XLK. I'm also paying attention to what the individual components of XLK are doing against the SPY and doing against XLK as well, doing against their sector as well. And generally, if I'm focusing on the top or bottom three worst performing sectors, I want to be focused on the stocks that are the weakest within that sector. Generally, sometimes you'll see stocks that are really, like, the weakest stocks are really beaten down and they're not giving you much opportunity. But as a guideline, I'm always thinking, okay, what's the weakest stock within the weakest sector that I could focus on? And likewise, if I'm going to focus on a strong sector, what's the strongest stock within that strongest sector that I could focus on? Now, I did mention that in an equity index uptrend, I'm not focusing on the best performing sectors, but again, it's a guideline because, see, energy is in play right now. Energy it's the best performing sector in the stock market. So I want to be focused on energy names. I want to, even though the SPY QQQ trends are down, I still wouldn't mind buying XLE or XLE components like ExxonMobil, SLB, those types of names when it comes into its respective support areas, because it's the highest performing sector. It's the strongest performing sector in the market. So from there, what I do is I come down and I'm looking at each asset class on the individual basis. I look at equities. I have it separated over here, but I look at equities. The top two that I look at is SPY, QQQ. I look at IWM, the Dow. I look at the VIX. VIX will tell you it'll give you some good information. Just like momentum, there's times that VIX will be preceding what price is going to do. I believe it was on Monday or Tuesday. The market was down quite a bit, but the VIX was barely down, or the VIX was barely up. And it was kind of giving you a little bit of a signal that, hey, people are not really, they're not buying protection as the market is going down. So you start noticing some divergences over there. I look at the bonds, I look at TLT, I look at AGG, which pretty much encompasses the bond complex, treasuries, corporate bonds, etc. I look at energy names, USO, I look at UNG, natural gas, metals, gold, silver. I'll look at FXE and FXY, but I'd rather look at the actual currency, which I'll show you in a bit. This is the ETF for the euro currency and the ETF for the Japanese yen. EEM, EFA is international, EFA is developed markets, EEM is emerging markets. And then of course, I'm looking at crypto as well. And I'm kind of considering crypto as a different, as another whole nother asset class. So again, I'm dividing it up into bonds, equities, commodities, currencies, and cryptocurrencies. And then what I do is I look at the individual charts of the S&P sectors, of the market sectors, because sometimes you'll see that an asset class or a sector is outperforming SPY, but the individual chart doesn't look good. So I want to confirm that the individual chart is looking good as well. So I run through that. I look at XLE, I look at XLB, run through all of them. And what I like to see is, like for example on XLK, when I'm looking at Apple coming into resistance, I like to see the market as a whole, whether that's the SPY QQQ and the sector coming into resistance. It just increases the probabilities of whatever you're looking at. So from there, if I'm deciding to focus on the bottom three sectors, I go look at the components within it. And over here I have I have all the index components, top 15 for the SPYQs, Dow, Russell, and then all the components for the individual sectors like XLK, XLC. So I look at the stocks within it pretty much and just see what's the weakest. This is another measure for me. This relative strength portion is pretty much, these numbers are pretty much telling me what this here is telling me. How the individual stock is performing versus the index. And whenever I could filter it. So Intel is the best performing within the XLK sector, while CRM, Salesforce, is the worst performing. So I'll just kind of go through that. I'm looking at each chart, and I'm looking for the clearest cut trends, because not every, like, Intel is the top performing, but for me this trend, it doesn't look good. It's sideways. It's not really clear cut. So I'm looking at the names that have the clearest cut trends to either trade from the downside or trade to the upside. And I just go through that process, and by doing that, every night I form a watch list for myself. And I kind of group it up into uptrends, I group it up into downtrends. And each morning and throughout the day, whenever I'm quoting specific names to you guys, that's what I'm quoting. I'm quoting the things that I have pretty much prepared from the night before. And a lot of these are going to be moving in the same direction. Like a lot of the XLK components or the XLY components are going to be moving in the same direction. So something that I use to filter is, again, what's the weakest performing and what's the clearest cut trend. I use something called, you don't really need this, but this is something called the efficiency ratio. It's something that was developed by Perry Kaufman, which pretty much gives you an idea of how much noise there is in the trend. For example, Amazon, it has a low reading of 0.02, so it's a messy chart. It's sideways. Probably same thing with this one, SMH, a little bit better, but it takes time to catch up. But that reading kind of tells me how clear cut the trend is. And then from there, it's what I mentioned before. I'm waiting for, like this morning, I took this Apple short. I took this short in Apple. I'm waiting for price to come into resistance and show some kind of a basing and a reversal process. And over here, it wasn't as clear cut as some of those examples that I showed you before. But price did come up, kind of put in that swing low over there, went up there. And then my trigger for this was I was watching this low, put a red horizontal line. I was watching that low over there. For me, if price traded below there, since we had a pretty, it's a picture that I look at, since we had a pretty big move up from there. If we traded below that low, for me, the probability was higher that we were going to continue back down in the direction of the trend. So that's what triggered me in this morning when I saw price opening up around that area. And you never know, it could go the other way and stop out where I'll take a small loss on it, or it's going to go and I'm targeting this area where target ones. So I'm always targeting if I'm short, and I'm always targeting the opposing support areas. I'm generally looking at two support areas for targets, but I mean, I'll welcome it if price goes to the third or fourth support area that I have. But T1, target one is an action point for me. Either I'm looking to take off 50% of the trade and start trailing my stop at that point, or I'm waiting for, or the other scenario, depending on the situation, depending on the context, it's an action point for me to just trail a stop, not remove any of the position, just begin trailing the stop. So it's either target one, I take 50% off, trail a stop, or number two, target one, just begin trailing the stop and cover, go somewhere. I don't like just arbitrarily going to break even. I like technical points to hide behind whenever I'm trailing the stop. And generally when I'm trading trailing the stop, I do a couple different things. I like to look for technical points to hide behind, whether it's on a 5-minute chart or a 30-minute chart. And I use this indicator over here, which is the GAN high-low activator. And it's something that can be, I use it as a guideline to trail the stop as well, because in a lot of the swings lower or swings higher, it kind of keeps you into the trade. And I'll get out of the trade if I'm short, if it closes above it, or if I'm long, if it closes below it. So so every, to wrap it all up, it starts with my homework, and then I come in the morning of, and I'm pretty much looking through my watch list in the morning. I'm looking at what the indices did overnight, the equity indices did overnight. I look at the futures for that. That's in this tab right over here. I look at the ES, I look at the NQ, and I try to see what they did overnight, especially in these days. They're forming, we have a lot of volatility, so there's a lot of levels that are forming overnight that I want to be cognizant of and pay attention to. So I'm paying attention to those. And obviously, if the entire picture has changed overnight, my, I guess my expectation or my thesis for my watch list will change as well. But once I have that overarching theme of what the equity indices are doing in the morning based off of overnight price action, I'm kind of going through my watch list and just looking for opportunities throughout the day. That's pretty much it. Then I repeat the same process every night.
Okay. I do have a question. When you talk about the relationship between the performance of the individual sectors compared to the SPY, let's say, what time frame are you comparing that to? Outperformance from how long? Is it for year to date? Is it the last couple of weeks? Like, what's that time frame?
Yeah, so it's generally 12 weeks. I have this indicator set to 60 days,
Mhm.
which is generally about 12 weeks. And that setting lines up well with a quarter, and it lines up well with the charts that I look at over here, which is on a weekly basis. So whenever I'm doing this comparison over here, looking at it on a weekly time frame, and I'm analyzing swing highs, swing lows, trend, support, resistance on a weekly time frame. And this reading over here, generally that 12-week reading, 60-day reading, lines up pretty well with the picture that I'm seeing over here.
Okay.
And
So,
that's across the board.
all right, got it. And so, as of right now, what are the three sectors you're focusing on that are outperforming, and what are the three that are under?
So the sector that I'm focusing on that's outperforming is XLE energy, because that's in play right now. I mean, oil is, it's one of the major drivers. You're seeing an inverse correlation with the market. Oil's going up, market's going lower. So I'm paying attention to the XLE for the upside. And then For the bottom three sectors, since we're in a downtrend, I'm focusing on technology, XLK. I'm focusing on XLY, which is consumer discretionary. It's the stuff that people spend money on, for luxury goods, whether it's hotels, travel, restaurants, Amazon, things like that, and also the financials. More so consumer discretionary and technology. Communications is catching up as well, but the top three is XLK tech, XLY consumer discretionary, and financials.
Okay, got it. So, in terms of anything else from a technical perspective that you think is important for us to know, is there anything that we left off?
I'm trying to think. I think I covered most of it.
I
I think
I
I
did have a
covered, yeah.
yeah, I did have a question. So I know you said that you target kind of that 2 to 3 the reward to risk ratio. Um, and then you mentioned every once in a while there's some outliers. What are some of those conditions that need to be present for that outlier?
Yeah, so that's something that usually outliers go in the direction of the prevailing trend. But besides that, there's something else that I do look at, which I've learned from. There's a trader that I follow. She's been like a shadow mentor to me, Linda Rashke.
Mm,
And I've learned this from her. This indicator that I have over here is a two period RS, the two period rate of change.
mm,
And something that I look at is when price breaks out of either like a 20-day or a 30-day congestion area or a 20-day range, 20-day range is better to say, we typically see some kind of a breakout pattern, but unfortunately, there is no clear-cut way of telling when that outlier trade is going to come. It's just for me, it's putting myself in a position to capture it if it does come.
mm,
And for me, that means trailing a stop. When I first started trading, I was noticing that obviously like when I first started I was taking a lot of there's a pretty big learning curve to this. Anybody that tells you as easy as they're lying to you. There's a pretty big learning curve when it comes to trading, but when I first started I was setting fixed targets. When it got to support, when it got to resistance, I was getting out of the trade. But what I noticed was on the trades that I was actually getting right, price was traveling a lot further than where I was exiting.
mm,
So from there, I'm like, okay, I have to do something to put myself into a position to capture those trades when they do show up. And for me, that's trailing a stop. And at the end of the day, it's a numbers game. It's the law of large numbers. Like, for example, this Apple trade, let's just say it does work. It's probably going to travel down, do something like this. I believe, like I mentioned earlier, that price ping pongs down, ping pongs up as it moves up or down. And let's just say it does something like that and then gets into this range, gets into my target. And if I'm trailing a stop, if it falls pretty fast, that trail stop could be up there. So I'm giving it a lot of wiggle room to hit my trail stop, which means that if I don't take profit there and price comes up to that point, it's gonna take away a lot of my profits. But I treat it as a numbers game because a lot of those decisive moves, a lot of those I guess trend outlier type moves, they move and they don't get those retracements. So every once in a while you do have those you do have those times where price will kind of move down very quickly. And if we do get a sharp move down, there's times that I'll get out before the trailing stop because a lot of those times you do see price reversing. But generally, I like to trail that stop in order to capture, in order to put myself in a position to capture larger gains. And typically, it's like that 80-20 principle. Typically, those outliers are occurring maybe 20% of the time, 15% of the time.
Okay, got it. So I think we've gotten pretty granular in terms of your strategy, your approach, your execution, risk management, and all that good stuff. I do want to ask you, what did you find as maybe one of the more things that you struggled with when you're trying to follow a structured system like this?
Um, right now or in the past?
Both.
I think that's always evolving.
Mhm.
When I first started, I had trouble taking losses. When I would take stops, I would get very impulsive and try to get that money back.
Like a
So
reversal?
yeah, I mean, I was like stuck on it. So if I entered Apple short and it stopped me out, I was just stuck on capturing that Apple reversal back down.
Mm.
I think every trader kind of goes through their. So let me say this: mistakes are you're never, as a trader, I believe that you're never going to stop making mistakes. You're just going to minimize the mistakes that you're making. One of the things that I struggled with early on was what I just mentioned, taking stops. And I'd get impulsive, just try to get that money back. And for some reason, I tried to get it back on that same instrument. So that's eased over the years. I did it so many times where it kind of, you got to make these mistakes so many times where it really, really hurts you. Then you're like, okay, it kind of like, it molds into you, into your character, that you're going to stop doing that. But it's something you have to always be consciously aware of in order to, prevent that from happening again. Another thing that I struggled with was I'm a contrarian by nature, so a lot of the times I'd be going counter trend. Whenever I saw price going up, I tried to short it. Whenever I saw price going down, I tried to buy it. And I think as humans, we're all kind of predispositioned in that way because we want to buy items that are on sale and vice versa.
Mm.
So that's something that this structure, this trend following structure, kind of prevents me from doing. I want to make sure that I'm trading in direction of the trend. And here and there, I'll take some counter trend trades, but they're limited. It's maybe 15% of the time, 20% of the time. So I've kind of put those safeguards into my routine. So I think those top two were the main ones that I struggled with.
Yeah, and that's a good way to think about it. A lot of times when we do some educational pieces and whatnot, I talk a lot about know thyself and know what
Yeah.
type of trader you are, know your personality. Are you somebody who is if do you get caught in the noise and so therefore you can't trade price action very well, so maybe you need to take your hands off and let it be more of a swing trader if you get caught up in the emotion and the excitement, if
Hmm.
you're propping yourself up, or in your case you have a tendency to fade or buy on a discount, what seems to be a discount. And what it seems to me what you did was you kind of made that into a smaller scale. You realized, hey, I don't want to get caught in fading these moves. However, what you did was you found the direction of the trend, and then you kind of isolate this little time period, and then you're able to execute a trade as it drifts. If you're in a downtrend, if it executes or if it moves back into the resistance zone, in a way that's kind of a fade. It's just on a smaller scale. You're kind of
Hmm.
fading it into
Yeah.
the direction that you want to be in
Uh-huh.
without blindly saying, oh, I'm going to be a reversion trader or whatever concept you want to quantify it. But knowing thyself. And I think what you did was put together your strategy, knowing who you are, what you do well, and what you are inclined to do, where you've made your mistakes, and put it into a place where, at the beginning of our conversation, we talked about where's your edge, and that sounds like that's what you developed.
100%. And one thing to add to that too, something that's helped me a lot over the years is the homework process, where during the market close, when things are not moving, when things are not flashing, I kind of mark off the levels where I want to, so to say, do business at or trade. And I'm only focused, yeah, levels develop throughout the day as well, and I'm cognizant of that. I'm marking that up. But I'm primarily focusing on the levels that I marked off the night before. And that just kind of keeps me from, it keeps the anxiety low. It keeps me from getting overwhelmed because I'm just paying attention to those spots. And then I'm just doing the same thing the following night and the following night and the following night. And that keeps me from over trading, and that's kept me from over trading. It's a big thing that's helped me throughout the years, and it also keeps me from just being anxious and overwhelmed by all the flashing lights and price movement throughout the day.
And it's so easy to get caught up in that. So
So easy.
we've been running for about an hour or so, and if there's just one takeaway that anybody who would listening that wanted to adopt even just one piece of your strategy and implement it tomorrow, what do you think that would be?
um I think it's going to be outside of technicals. I think it's going to be risk management, because for me everything kind of boils down to that. It's minimizing your losses, right? For me that's at the opposed. Technicals show me where price is not supposed to go, so that's minimizing my loss if it goes past a certain resistance level where I'm short, or past a support range where I'm long, and just trying to maximize the winners. From a technical perspective, again, there's different temperaments, there's different styles, and it's people who fade the trend. There's plenty of people out there that do that and make a living doing it. But for me, I think the biggest moves will come in direction of the trends. So I'd say those two pieces, one non-technical and the other technical.
All right. I do want to allow anybody who's listening to throw out a question or two to Chris, if you do have any. I know Sammy was one who jumped in with a question, but if anyone has any, feel free. Now would be the time. And if we don't, I reckon that you would not be opposed to an email or somebody reaching out to you in some capacity to
Yeah,
get
yeah, for
any
sure.
information.
And as I come in here too, I'll be talking about these same things over and over and over again. Like my posts are pretty repetitive. It's the same thing over and over again. So I think that'll help. Trailing stop strategy. So for trailing stop, like I said, it's whenever I enter short, I'm targeting the opposing support range. The first support range is my target one. At that support range, there's two scenarios. Either I'm releasing, or I'm exiting 50% of the position and I start trailing the stop, or I'm just taking that action to trail the stop just and I have my current position. I'm not removing 50% of it. So there's those two scenarios, and that depends on the context. Now, as far as trailing the stop, sometimes I like to hide behind. When I say hide behind, I mean like trail my stop behind technical points that are forming on the charts. The two charts that I look at are the 30 minute. I use the 65 minute pretty often, but during these days when volatility has increased, I'm looking at the 30 minute a lot more. It pretty much aligns pretty well with the 65 minute. But what I'm looking to do is, as price travels down, I like to trail behind defined price structures. Usually that's swing highs on the way down and swing lows on the way up. And you'll see that on the 30-minute chart, and you'll see them on the 5-minute chart. The ones develop, as a rule of thumb, anything that develops on a higher time frame is stronger than anything that develops on a smaller time frame. Another black and white way, like I mentioned, was using this GAN high-low activator. It's the GAN high-low activator. And what I pretty much look for, see in this case, Apple is traded below that point right there at 253.90-ish, which made that top one come in, the top line come in. And I'll use that top line to trail a stop on the short side, and I'm generally looking at a close beyond that. And I'll typically do that on this 78-minute chart or the 65-minute chart. That's pretty much it.
All right. And we didn't have any other additional questions come in, so I think this will be a good place to hit the pause button. But as I mentioned, if you're open to receiving any follow-up questions from the listening base, I'm sure they would appreciate that. What is your email? And I'll put it in the chat room.
Let me check. I believe it's cduhancy at briefing.com, but
You
let
know
me
what?
double.
I'm going to let you put that in the chat room.
Yeah, yeah. Give me. I just want to double check. Uh, yeah. Let me put it in the chat.
There was one more question that rolled in from Spartan Stoic.
You don't
Says
use
you do
EMA.
not use the EMA for your stops.
You can. I know
I
some
can.
people that do. I don't. But that's another like nice black and white way of doing it for sure. I don't do that though.
Okay. Well, Chris, I can't thank you enough for joining us today, giving us some insight into how you put together trades and your execution style and what you're looking at, all the homework you do. I'm sure when we take a look at your posts and some of the things, it'll make even more sense than
For
it already
sure.
does. And your posts are pretty straightforward. I don't think that we've had too much trouble understanding what you're looking at and everything. But this really did bring it home for us all. And I appreciate that you highlighted some indicators that we probably don't talk about a lot. That two-period rate of change, and then the GAN high-low activator. Those are a couple of indicators that I don't put on my charts. So to get some conceptualization of those, and maybe something that people can play around with and add it to their own arsenal.
For sure. For sure. Definitely.
All
Yeah,
right.
you have to make all these indicators your own. For sure.
For sure. All right, Chris. Well, I will let you off the hook for now. Go
Alrighty,
find us some
Jim.
good ideas. And hey, you've done a great job. I enjoy looking at your posts. And, I don't know if you're always on in the chat room, but usually what I'll do is take a look and see what the charts say. And many, many times, what I'm kind of talking about and looking at really does line up, and there's some overlapping
Mm-hmm.
technical signals and indicators and just structure that I think really does blend very well. So for everyone, I appreciate your time today. And again, Chris put his email in the chat room, so if you do have additional questions that you didn't get to, feel free, reach out to him. Thanks
For
as
sure.
always, Chris.
Definitely. Thank you, Jim. My pleasure.
All
Talk to you
right.
guys later.